Hi, I'm Doug Porter, Chief Economist with the Bank of Montreal with the monthly economic commentary. Well, as we wrap up 2015 and move into early 2016, there are a lot of moving parts for financial markets. Perhaps the most important element that we've seen recently, of course, is the interest rate hike by the U.S. Federal Reserve, the first rate rise in almost a decade, and markets are still absorbing that. But from a Canadian perspective, probably the most important development that we've seen here is the dramatic drop in the Canadian dollar. And it's tough to overstate just what a big move this has been. As I speak to you, we've seen the Canadian dollar drop by about 17% in 2015, making it one of the worst years on record for the currency, topped only by the very dramatic move that we saw in the depths of the financial crisis in 2008. And almost everything that could have gone wrong for the currency has gone wrong. Just briefly, I would say the three most important factors driving the currency lower have been the plunge in oil prices, the divergence between Canadian and U.S. monetary policies, which will continue into next year, and also just the underlying strength in the U.S. dollar. Now, those two latter factors do not look like they're going to turn around over the next year as we go through 2016. We suspect the U.S. dollar will remain strong against almost all currencies. We think that the U.S. Federal Reserve will continue to grind interest rates higher over the course of the next year, probably by about 3/4 of a percentage point, while at the same time the Bank of Canada does nothing with their interest rates and possibly even trims them. So the divergence between Canadian and U.S. monetary policies will remain in place. And really, that leaves only oil prices and resource prices as a potential savior for the Canadian dollar. That's what we need. We need some stabilization in those prices to help support the Canadian dollar. Now, our view is that over the next year, we will see some mild recovery in oil prices. We think they move back to sort of the mid $40 range. And we think that that will lead to a very mild recovery in the Canadian dollar. But if we're wrong on that front, that spells further weakness for the Canadian dollar. Our best estimate at this point is that the currency is likely to rise slightly over the next year to the range of between 72 and 74 cents. But again, if we're wrong on oil prices and they remain at these very low levels in the mid $30 range, we could easily see the Canadian dollar weaken further into the high 60s. Now, as a Canadian investor who perhaps holds assets in US dollar form, that's not necessarily bad news. They would actually see the value of those investments rise, but certainly we're likely to see more foreign selling of Canadian assets if the Canadian dollar remains under pressure. That's the monthly economic comment for this month. Thank you very much.